shares of Halliburton falling a little bit after first quarter revenue fell more than 40%. They're cutting 6,000 jobs, Taylor, and I cannot believe this is ever a good sign. They've delayed their earnings call.
Yes, they have, till May 3rd. So
that's because it's going to be amazing on May 3rd, or because, wow, this is terrible and we've got to get our ducks in a row?
Because it's curiously after the date of April 30th, which is when the deal between them and Baker Hughes can officially be called off by either party. So many people are expecting that Halliburton is kind of hedging its bets here so that they can present themselves as a standalone entity on May 3rd rather than presenting them as potentially a combined entity with Baker Hughes if they do decide to call it off after this week is over. So Baker Hughes could potentially walk away with $3.5 billion of Halliburton's money. That being said, the pre-release wasn't terrible. The margins looked better. Aside from a couple $1 billion impairment charge, results were better than everyone expected for the most part.
But you just said they're about to get.
Yeah, they're going to lose a third of their cash.
As you said, at this point, no one is betting that the Baker Hughes deal goes through.
As soon as the Department of Justice filed a lawsuit against them, people pretty much baked it into the stock price that this is like 99% not going to happen.
So it's baked in that they're about to write a check for another $3.5 billion.
That's what people are saying. Yeah.
Is that in fact the case though? Because I guess we were talking about this a little bit. Is that actually going to be the case? Because if you have a situation where neither party actually called off the transaction, they're being told that they can't move forward with it. So then is there language in there that actually holds Halliburton liable in this case if for some reason regulators don't let the transaction go through?
I believe there is if regulators don't allow it. And especially if Baker Hughes just says, we're done, this has taken way too long. You gave us till April 30th, and now it's beyond that. We want to operate as our own. We want to just forego this. So if Baker Hughes pulls out, definitely, and I'm nearly certain that if they prolong it, if they both stick with the deal, and then suddenly regulators are like, you know what, we've had enough, this is definitely not happening, I'm pretty sure that Halliburton still has to pay that money regardless.
Let's go to the job cuts for a second.
Yeah.
Because this is, we're now in year 2 of large energy companies saying it doesn't look good in the near future for the price of oil. Therefore, we've got to cut costs, which means in this case, cutting jobs. Is there a light at the end of the tunnel, or should we expect to see more of this coming from other energy companies this earnings season?
Well, Schlumberger announced its own significant job cuts in the first quarter of this year as well. Obviously, it's the biggest competitor to Halliburton, the biggest company in the equipment and services industry. So they're still feeling the pain just as badly. You started to see some of these service companies like Core Labs expects a V-shaped recovery to start somewhat in the second quarter, maybe the third quarter of this year. Halliburton does think that the bottom of the rig decline will happen sometime in the second quarter. So they're hoping that at least the decline flatlines, if not starts to recover. So you see the price of oil increasing, but that still doesn't impact them necessarily until activity picks up. And then I saw a report from Deloitte saying that upwards of 175 exploration and production companies could file for bankruptcy this year, which would be a third globally. So there's still, and if that happens, then that's a third of their potential customers gone bankrupt. That doesn't mean that they're going to stop doing business, but it does mean that they're going to have to scale back even further. So will there be a recovery for this company throughout the year? I'm not going to bet on that, but I'm going to bet on them long term for sure.
I think that maybe says everything you need to know about the oil industry that Taylor laid out, that flatlining is the good scenario.
Yeah, people are definitely hoping, at least in the services sector.
Unlike in life, where someone flatlines and it's all over and they move to the great beyond.
Yeah.
We're rooting for flatlining, Jason.
Sure. Well, I think you look at it from Halliburton's perspective, you look at it from Schlumberger's perspective, you think about it beyond the energy industry. Think about the banks that have loans outstanding with a lot of these oil companies, especially the smaller ones. We've seen this play out before where there are going to be banks that are going to have to deal with sort of the ramifications of these loans that might not be paid back. And there's no question that when you look at Halliburton and Schlumberger, for example, I think they're two very good indicators of really what's going on. The good part, I think, for investors at least, is these are two of the biggest companies in the space. They're going to be able to weather those financial headwinds. Even if Halliburton does have to pay that what $3 billion,
$3.5 billion,
and it looks
and they
like
have
that's
about
going to
$10
be the
billion
case.
in cash. Yeah.
I think we saw Halliburton's CEO Dave Lassar said, quote, "What we are experiencing today is far beyond headwinds. It's unsustainable. My definition of an unsustainable market is one where all service companies are losing money in North America, which is where we are now."
Yeah.
End quote. I mean, Schlumberger didn't have anything to really counter that either. I mean, they basically see this just huge cash crisis. And so the companies that have balance sheets that can withstand this will be able to sort of batten down the hatches and deal with the storm. And honestly, as bad as it sounds right now, this is when you really need to be looking at maybe investing in some of these companies. I mean, this is when you need to be considering possibly some exposure here. And so we have some exposure to these businesses. Halliburton is one of the companies in $1 million portfolio. We bought it with the assumption that it was a matter of when, not if, things turn around, and we're still waiting. The when hasn't come around yet, but this is actually a pretty good sign that maybe things are kind of hitting a bottom.
The company has done relatively well in the market too. It's somewhat outperformed the energy sector. So you still want to. If I was going to reinvest some more money into Halliburton, I'm waiting until after April 30th, just because I'm already a shareholder. So I'm not sensing any reason to put more money at risk in case this deal does officially go south and people decide to sell off a little bit. But if it does, that could be a great buying opportunity. And to the point on the banks, they've kind of been doing their best job at pushing maybe some bankruptcies off a little bit, because they've helped finance several $1 billion in equity raises just in the last couple of months. Might not be the ultimate solution, but at least it's pushing off a potential end date for some of these companies' lifetimes.
Yeah, and for Halliburton, I mean, you look at $3.5 billion. Sounds like a lot of money because it is a lot of money. But
yes, it is.
By the same token, I mean, Halliburton is a $35 billion market cap company in bad times with a little bit more than $10 billion in cash and equivalents on the balance sheet. So they certainly have the resources to deal with this adversity in the near term, and it's not going to really ding them too terribly hard as things improve.
It'll be interesting to see what Baker Hughes does with that money if they're just giving $3.5 billion. Personally, I think that they go out and buy some of these cash-strapped businesses themselves.
What would you do with $3.5 billion? You could buy an island.
I would, but they probably won't.